All right, very good. Well, welcome everyone. My name is Annabelle Pacheco, and I'm with the Multifamily Weekly Talk here with co-host Paul Kraus. And we just currently are both actively involved in multifamily. And the reason for this weekly call is just to share information with those that are looking to get involved in multifamily, possibly looking to partner up with others. We just, we invite guests, speakers, we'll share our own personal experiences with you guys. And just please keep in mind that we are not financial advisors, no legal advice. I mean, we're just really sharing our information with everyone in hopes that it's going to inspire you to go out there and do the same thing. Just a little background on myself. I have been involved in real estate for 20 plus years, and I've done a lot of single family home flips, rehabs and flips. And about 7-8 years ago, decided to change that into the multifamily space and purchased my own 34 door and managed from California. Property was in Texas, and pretty much just have been ever since then. Enjoy multifamily, love what it's done for me and my family, and something that I'm continuing to grow. Now, Paul, if you'd like to share a little bit about yourself.
Yeah, sure. Got into real estate 2006, originally as a wholesaler, and then pretty much worked as a fix and flipper for many years on my own. Eventually decided that I wanted to get licensed as a realtor. So I became realtor, licensed in 2007. Also worked in remodeling so that I eventually got my contractor's license and took the deep dive, thanks to your inspiration, back in 2019 into multifamily. So I've been working Midwest and the West Coast multifamily since 2019. So
nice, fantastic. So as you can see, I mean, we're both coming on this call. We both have experience in the multifamily space. Usually we'll invite guests also to come in to share whatever specialty it is that they're working on. But today we decided to keep it just Paul and I. Paul's currently been working on some really incredible stuff that I thought would be great to share with those that are either looking to get involved, you just haven't pulled the trigger yet. Paul's got some really great stuff that I thought, you know what, Paul, you got to share this today with everyone on our call, because I think that people need to hear, this is just real. We're not fluffing anything on this talk, on this show. We're really sharing with you guys like just real stuff that's happening right now with lending, with management, with the price of, cost of construction going up. I mean, there's so many different ways that you have to analyze a deal, and so many different things that you have to look at that we didn't have to do maybe in the last 2 to 3 years. So Paul, tell us, share. I know you and I were having a conversation today, and I said,
we did. Yeah.
You know what, let's not even talk anymore, because I think what you have to say is awesome to share. Share with us what you see, what you're going through right now, especially on this deal that you just closed.
Sure. Well, and first of all, let's talk about a good resource that everybody can use who is interested in investing in multifamily, because one of the ones that I use, and can you allow me to share my screen? I mean, I think I can, but I would like to share the multi-housing newsletter. Let me see if I can do that. Share, and I'm going to go here, and hopefully everybody can see this, but basically this is the multi-housing newsletter. I like to use this as a way to kind of get a feel for what's going on in the bigger picture of multifamily and in housing. And as you see here, this is the landing page here. There's a great report that came out, at the beginning of the year called The Housing Shortfall. It's a great read. And then if you kind of scroll through, you can kind of see some of the latest news that some of the contributors are making. And if you would like to go into particular markets, like for example, I'm interested in the Phoenix West market. So we go ahead and scroll down and Phoenix from here, and then I can see kind of the like bigger picture trades, some of the bigger developments. Sometimes they're just purchases, sometimes they're sales, sometimes they're ground up. And you can kind of also get a feel for some of the lending and things like that that's going on in a particular marketplace. And before I got invested in any kind of multifamily, I actually started reading the articles in different marketplaces because I was interested in the Southwest, and I was interested in the West, and I was interested in the Southeast, because these are some of the areas that we hear about. And why? Because that's where a lot of migration was taking place. Companies moving from California to Texas, to Florida, to Colorado, and wanting to know, well, okay, if these companies are going to go, are others going to follow? Because migration absolutely is a great way to figure out a marketplace that you can invest in safely, or at least that reduces some of the risk, because all that net migration might add up to lots of jobs, and jobs absolutely creates a local economy that would be able to obviously support any kind of multifamily investment. What you and I see, Annabelle, for sure, is a lot of people who get into this multifamily space, and they get in for all the wrong reasons, and they make a lot of mistakes. And we make mistakes too. And the idea is to share some of the learnings and share some of the things that we have found as we've gotten invested in some of the deals that we've been investing in, so that we can share those things. And I think one of the first places that it's really easy to make a mistake as a multifamily investor is to get into it for the wrong reasons. I've heard some of the tales that you want to get into multifamily because it's a way to scale your business. Well, you can scale any business that you're very good at. If someone's doing single family residential, you can scale a single family residential business just as viably, if that's a word. I'm going to create that word today. But it's just as viable as you can a multifamily business. So is one better than the other? No, not necessarily. It's just a matter of where you want to be able to invest in, and where you want to be able to make the most impact. And the reason why I got into multifamily was not because I didn't feel like I could get into a single family residential industry or business, and that I wasn't able to scale it. It's because I saw the opportunity to get into multifamily, because the spreads between where you could buy something and where you could refinance it or where you could sell were much wider than residential in the markets that I was participating in. So it's about getting into a marketplace. It's about making an investment because you see an advantage. That's a mindset thing, and that's a hard thing to teach people. Now, we're going to go into some details a little bit later about how this has all turned out, but I just want to kind of start with, getting into multifamily is a great way to scale a business, or it's a great way to, absolutely scale a portfolio, but it is not the only way to do it. And if you don't have the scaling mindset correct to begin with, you can make some mistakes as you are trying to scale that business, because you may not be ready for the time commitment, for the money commitment, for the ability to manage the property, which is what I call, the operational side of things. It's certainly not a passive business. And I think you'd probably agree, Annabelle. It's not passive on any level. You're very much an active participant, even when you are hiring people to do a lot of the work for you, whether it's the bookkeeping, whether it's doing your taxes, whether it's to manage the operations and the process of remodeling a portfolio. It's a lot of work. Yeah. And I would argue that it's at least all the same amount of work as a residential portfolio is. So
for sure,
not that it's any easier.
No, it's just, I can only share, it was not that it's any easier, it's that you're just scaling, right? Instead of doing one house, you're now able to do 6, 7, 8 units, 8 doors at the same time, and the cost goes down, right, per door. It's just different, but it's a lot of work. It's hard work. And I think the misconception out there is that, yeah, hey, yes, we're getting cash flow, that passive income coming in, but there's nothing passive about us receiving that income. We're still actively, we're involved. We're making sure that we're making sure that things are actually getting done. So I agree.
Okay.
We're still
Yeah.
very much involved.
Good. Yeah. And that's the thing is, so mindset's a big part of it, and that's a hard thing to teach, but it's definitely something that absolutely we need to just kind of keep in mind that there's no doubt about it that this is a great business to be in, but you got to do it for all the right reasons. All right, kind of let's move on. So I want to share my screen now.
Perfect.
And so let's get into, so here's a building, here's one of the buildings that we got invested in. The reason why I'm kind of showing it from the street level is this is kind of like what we see when we drive by an apartment building, right? We just kind of see, there might be some residential, there might be some multifamily.
Yeah.
There might be some other multifamily, which there is. There might be some other residential. But for the most part, when we're just driving around looking for a building to buy, let's just call it that. We don't know exactly what we're going to get into yet. They kind of look pretty plain, right? I mean, it's just a building, and you can kind of see it from the side, and you start saying to yourself, okay, I see what it is, but do you know how to look at it? So one of the things that you do when you start investing in multifamily is you develop an eye. No different than you might say develop an eye to find a single family property. So right now I'm looking at a single family property, which I would say, generally speaking, it has some pretty decent curb appeal to it. It's well maintained, it's well kept. The hardscaping here, it's very orderly. You got one tree here, looks pretty healthy. Car parked in the driveway. The driveway, looks pretty orderly for the most part. You don't see garbage. The fence line looks pretty nice. The paint job on the house itself looks decent. It doesn't look terrible, but okay, we see some bars. Maybe that might be of some kind of concern. But for the most part, it has a certain amount of curb appeal, and that curb appeal is going to draw our eye to let us know is there an opportunity here to improve upon this or not? Because one of the ways we obviously make our money is in this business is to buy at a lower price and sell at a higher price, or to refinance at a higher price so we can get cash out of that building and we can make more investments. Okay, so that is kind of how we look at things from a single family perspective. So how do we look at them, when we see a multifamily building? And maybe that's too close, I'll move back, sorry. Okay, so one of the things that, you can easily tell from this is what I call, basically your split line kind of building. Everything on this side is obviously, this way, and everything on this side of the building is obviously this way. So immediately what I would be thinking is that, okay, there's no common area here. There's no common area. This is almost like a hotel, like a Super 8, a Hotel 6. This is almost like hotel apartment living. There's no common space that people share. So immediately I know that if we're going to purchase this kind of investment, we're only going to be doing work on the inside and outside. There's no common area involved. So no budget dollars have to go towards that. And that's good for us, because what that means is that the money that we're putting in, we're getting directly back because people are paying for that. And that's being paid for by the rents. So I'm starting to develop what we call, like an eye in terms of how to look at what we're envisioning our renters are going to look at this property with. Is there outdoor lighting? What's the paint job look like? Are there handles? Are there railings? Does it look safe? Let's not kid each other. I mean, people want to live in a place where they're going to feel safe, where they're going to feel that more or less that their well-being is not going to be in jeopardy. Is there parking? Can you park on the street? Can you park in some kind of parking itself? And as you see here, there's a ton of parking at this lot. There's also a sidewalk, a walkway. Is it lit at night? Now, actually, this city does not encourage lighting. And the reason why is because they want to be able to stargaze. So this is one particular thing you need to know about this marketplace itself. They, as a community, and this is a cultural thing, they want to be able to have very low light radiation so that they can gaze at the stars at night. So that's something you need to know from local brokers and things like that, which is why you do not see much lighted. Like, look at this, one light, and there was one across the street, and like, that's it. There's no other lights around, okay? So that might be something you need to know about in terms of local knowledge and expertise. But what else are you looking for? Okay, so you're kind of noticing that the units have one window and one air conditioner, one door. And it kind of seems to be like that throughout, okay? And I can zoom in on that if you want me to. So what that starts telling you is a little bit about, this unit mix kind of looks uniform for the most part. And it is. In fact, these are all studios. There's no unit mix. It's just studios. That's it. 20 studios. Done. Now, that's something that I like from an operational perspective, because now I can treat the remodeling part of the process similar across the board. But generally speaking, when we're talking about having a mindset of, how to really do this business, we want to be thinking about what we do to one, can we do to the next? And if we can, is that going to translate into some time savings? Buying materials. Are we buying all the same kinds of materials? Are the upstairs floors the same layout as the downstairs floors? In this case, they're not. They're actually a little bit different. So that does have to factor into you then, doing a really thorough inspection, walkthrough, making notes. Hey, did I notice that the ceiling heights were different? Did I notice that there was something in the upstairs units that were much different than the downstairs units? And if so, what was it about that? It would obviously be ideal from an operational perspective if everything was identical. But even if it's not, just basically making a note of what is different. Because in single family, like from your years of single family, right? That from one part of the house to the next part is going to be a different layout. But apartment buildings aren't like that. What I try to do is I try to look for similarity in layout in apartment buildings. That way, from an operational perspective, I don't have to think too hard about it when I am starting to put a budget together and when I'm starting to think about what it's going to take to change out an air conditioner, or maybe, change out an entire bathroom, or if I'm even going to be changing out bathrooms. In some cases, I may decide that I just want to glaze bathrooms and not change out tile and not change out tubs. So these are some of the things that you might think about a little bit differently than residential. So the way you think about duplicating your efforts in one apartment to the next apartment is a mind shift compared to your single family residential investing, which usually will require a lot more thinking about, only because the floor plans don't have that identical relationship. So
that's what I loved. Sorry to interrupt you, but that's exactly what I loved, going from single family to multifamily, that I knew, for example, I had a building with 10 units, and I knew that, 7 of those I was going to be able to go in immediately, right? And all 7 were going to be exactly the same. So the cost of cabinets for the kitchen, like I knew exactly how many cabinets I needed for the bathroom. I knew how many cabinets I needed for the kitchen. And if there was like a hallway closet. So we knew up front how many cabinets I needed, right? And let's say I was doing 7 units times 7, that's how much I was going to spend. Same with like you have the kitchen here, right? We knew countertops. How many countertops do we need? 7. how many, bathroom, countertops, 7. I mean, it's great because it allows you to do, number one, you're going to get a better price for all 7 units, and you get to fix them pretty quick, all 7, if you have all 7 units. So for
Right.
me, it was a nice change to go from single family home, which honestly takes longer. Even if it's a 3-bedroom, 1-bath home, there's so many, all the different lightings and all the different colors of tile. You want things to look, it definitely was nice to go to just be able to have that opportunity to just all 7 units to be fixed and all the same. So
So
yeah.
I'm going to go through this one quick because this is this is a sample of one of the apartments. Again, it's a studio. Everything's a studio in this building. So we're going to go through really quick. But the thought process to this was about delivering a product that people are, generally speaking, very satisfied with at a particular rent. Okay, because we wanted to target a particular rent and doing enough work so that we're providing enough value. Now, the first thing that we did obviously is, okay, we come in and we start doing the flooring. So we've got brand new luxury vinyl flooring. We got rid of old carpet. Done. Next thing, do we have smoke detectors and carbon monoxide? So we change those systems out. Great. Next, go to the boxes, the cabinets themselves. What kind of condition are those in? Do we need to replace them for the marketplace and to obtain a certain particular rent, or can we keep the boxes? In this case, absolutely, the neighborhood is totally fine with the boxes. So all we did is we just changed the handles. We cleaned up the appliances, kept everything white. We did go with a slightly different paint scheme. So instead of doing all bright white, we did a just slightly gray with white trim. And the white trim is barely even noticeable in these pictures. However, we do the white in the bathrooms. We go all white in the bathrooms for sure. Do little things like the kitchen faucet. Go ahead and do. Okay, so done there. Oh, and then the electrical. We like to check all the electrical. So we go through all the outlets. There's not even that many. It's great. There's only like 5 outlets in one unit. So we go quickly through these just to see what kind of wiring are we dealing with. Do we have good connections, bad connections, and do we want to just, quite frankly, spend a little bit of money to put brand new outlets in, make sure that the wiring is good, and that we have some GFIs in there. So we do all that in 1 week on basically every single apartment, and so we check all those boxes there. I'm going to clear all those out.
What's next to the fire extinguisher? Just curious.
Oh, that's an old heater unit. So that's how the units heat themselves.
Oh, okay.
Electric.
Nice. Okay.
No gas in this building.
Okay, all electric. Okay.
Electric. Yep. Great question. When I first saw it, I figured it was something like that. Okay, so next. So then we go into the bathrooms and same kind of thing. We're just looking to move really quickly. Like, what is it that we can do? And in this case, we kind of lucked out every now and then where we had a really good vanity. So check on that. We might change out the faucet. And if we do a faucet, we always do an angle stop and water supply line because we want to make sure that if we need to service that in the future, we don't send some plumber in there and all of a sudden they go to do an angle stop, repair, and the angle stop disintegrates in their hand, right? So we get all that done ahead of time. Do a new lighting element, clean up the mirrors and medicine cabinets, things like that. We do a new paint job. This is all white. Everything is here now white. New flooring, soft close toilet seat. We want to reduce noise in our apartment environment. Check the guts. If the guts look good, great. If they look like they're garbage, they go. And then obviously the angle stop, water supply line, and the connection to the toilet just to make sure that same deal. We don't want to deal with leaks in the future because God forbid if that angle stop is crummy, lousy, whatever, we don't want to worry about, doing one later on when a tent's already in there. So we'll change that out. Angle stops down here in the sink, clean it all up. We are done. And in about a week, we are done with this entire apartment. Now I'm going to close this out for a sec because we want to go to the other side, which is the tile tub all that stuff. What I have found is, generally speaking, that the tenants do not use sharp objects for the most part in these tubs. Every once in a while they do. But because they don't do it a lot, it's absolutely worth it my time to not do the tile, and I just like to glaze everything. So this is a fully glazed tile and tub job.
So, hey, Paul, how long does the glaze last in that unit?
I mean, so as long as they're not dropping sharp objects, the obvious thing is if they drop a sharp object, it can nick the glaze. And when it nicks the glaze, that can start the process of it coming up. My experience with it is that as long as you don't have people dropping heavy or sharp objects in there, you could go 5 years. You could go 3 years even if they do nick it up, because it doesn't come up right away. The only time that I have found you have a hard time with maintaining it is in kitchen sinks, because kitchen sinks take a beating and you're dropping more junk in there. And when you drop any kind of blunt object on a porcelain top that's been glazed, that surface, it can only take so much of a beating, and then after a while it's gone. It's just totally gone. You got to sand it down, you got to reglaze it.
Yeah.
But if you've got good toilet and all that, if you've got good tubs, if you have non-leaky surfaces, so to speak, then great. But if you have an issue with your, let's just say your faucets and things like that, bad cartridges, they got to be replaced. I like to go in and change out all those handles and do all that before I've glazed, just to make sure I know what I have. If they're in great shape, I'll clean them. Yeah. Because honestly, sometimes a good, clean, working faucet that is not leaking, I'll take a chance with. And same with the shower heads. If the shower head's okay and I can clean it up, make it look nice, even if it's only a year old, it might clean up beautifully. And as long as it's functioning properly, that's what your tenants want. They want stuff that works and doesn't break. Right. And if it breaks, they like to know that you can fix it quick. Mm-hmm. A lot of times they come in with these little angle anti-drip plastics. We love those, even though they're not that beautiful. We love those because they obviously protect the wall. And we always go in with a couple coats of paint, of semi-gloss paint. I don't like to go with anything less than semi-gloss in apartments that I know are going to be heavily used, or that I think don't have great ventilation. As you see here, there's no windows in here. So the only ventilation source is either opening the door or the fan itself. Mm-hmm. Nice. But other than that, this is a process like we were talking about before, where it's, go in and, relatively speaking, do the same thing over and over and over again. Now, even if I was, mindset wise thinking, okay, I'm going to be doing all new cabinets, so 10 new sets of cabinets, 20 new sets of cabinets, whatever. As long as you go with a mindset that you know what that flow looks like, okay, I'm going to start with my cabinets, or I'm going to start with my paint, whatever that is. As long as you know what that flow is, and then you can follow that continuously, that's how you can get to quickness. In single family residential, it's very challenging to have that kind of flow, because you don't generally have floor plans and layouts and bathrooms that have such similar qualities, right? I mean, generally speaking, all of these apartments are 320 square feet, I think, something like that. I didn't take pictures of the closet. The closets are boring. They're just walls, or 4 walls, and they're walk-in. They're not even step-in. They're like walk-in. So what do we do with those? We just paint them. The lighting elements, generally speaking, we're usually very happy with what's in there. We might put in an LED light bulb, but an LED light bulb is a 10-minute job. So why are we doing that? Well, we're just doing that to give them brighter lighting, and they can go in and change those afterwards if they want. But generally speaking, we like the lighting itself to be LED, so that it's lower lower energy usage and things like that. So this is where this is a job, and that's why multifamily investing and doing the operations, whether you're going to be your own project manager or whether you're going to hire a project manager, someone has to go in and do all this. That's why multifamily initially is not a passive process in any sense of the imagination. It is work. And it's not that you can't work a job and do this. And it's probably advisable to keep your day job, honestly, until this replaces your income. But absolutely, this is a job. Someone has to go in and do all of this work. Even if you are hiring them remotely or you are hiring them and you live right next door,
Right.
someone has to monitor quality control. Someone has to monitor, are you staying within the budget? Someone has to monitor, did your contracts all add up to what you spent at the end of the day, at the end of the week, at the end of the month? And if there were change orders, why were there change orders? Like, what is it about this process that, did you decide to all of a sudden not keep the brick wall and you wanted to make it all sheetrock to make it look a certain way? Like, what was it that you did to get involved with change orders? I'm in the business now more than anything else of not doing change orders and doing a lot of pre-planning. And I would actually rather take more time on the front end, even, if it means taking a month and really planning the work, meeting with your different vendors. And maybe that's something we should talk about next is vendor management.
Well, let's talk about one thing. What you're talking about, you're a hands-on operator. I mean, you're there, you're overseeing the work, like you are involved, and it's exactly what I did, right? We were hands-on operators. Now, if you want to invest passively, you want nothing to do with the property, then you can invest passively. But, you're not going to make the same amount of money as you would if you were involved in it, like I was, and Paul is. So just, I want to make sure that we're clear on that, because there is ways of passively investing, and there are ways of investing in multifamily when you're hands-on operator and you're doing the daily. I mean, you're not, there's nothing passive about it.
Yeah. And just to be clear too, everything we've talked about up to this point, Annabelle, is really where, as a multifamily investor, you're being completely 100% hands-on.
Yes.
And maybe it's because one or two reasons, or a couple of reasons. Maybe one, you have the inclination, you have the desire, you have the drive, you have the time. Those are great reasons to do it, but I would not recommend trying to do it alone. It's really important, I think, to have a handyman or a couple of handymen who can kind of maybe educate you about the process if you have not done so, because absolutely it is really easy to spend a lot of money really, really quickly and get absolutely nowhere in this business and nowhere in your project if you do not know what you're doing. But maybe you have the experience, maybe you have the expertise. And if you do, then that's great. One of the things that you can also do, like what Annabelle was saying, is be passive in this business and let someone do all this. And just make a deal with them that, look, as long as my bills are no more than what we talked about and, what we agreed to in some kind of contract, some kind of agreement, then go ahead, let someone else go do it. And you can just basically make sure that the contractors, the vendors all get funded and they have all the funds that they need to do the work, and that your leasing team is in place and you have people who can lease up that apartment once it's been completed, and that you can keep doing that over and over until your building is finally filled, it's fully occupied, and now you're cash flowing at your maximum capability. And once you get to that point, you can then decide, are you going to be the property manager, or are you just going to hire that function out to a third-party vendor and use a property management company to manage those tenants? Yep. So that's what's great about this business. You can decide to what degree you're going to be active or you're going to be passive, right?
I agree. Now, I know that you recently closed on this deal. Are you in a position where you'd like to share just the whole lending process look, I know we don't have, a whole, we don't have a lot of time, but I think it'd be great. And maybe this is something that we can continue on. It's like just your experience right now, due to changes in the market, like interest rates and just guidelines. Yeah. I know with lenders that have definitely are a lot stricter. What do you see? What did you experience? What can you share with others that are on this call?
Yeah, the lending environment has been hot or cold. That's the best way I can describe it. It's been hot or it's been cold. Deal makers, lenders have either liked deals and maybe they like them a lot, or they don't like them and they find every single reason to destroy the deal and kill it. My experience recently in this particular deal was that I initially had a lender that was very excited about the deal, really liked the way it looked initially. We were at that time going to do a 60-40 investment where we were going to put 40% down. We really wanted this deal so bad that we wanted to make it very easy for the lender to say yes to this deal because we were going to have so much skin in the game. Okay. So, kind of in the world of multifamily investing, 60-40 is considered really, really conservative in terms of, you would think, who wouldn't want to do that deal, right? Like, just who wouldn't want to do it, okay? Because you're talking about not really very much leverage. You're putting a ton of capital into the deal. So we started at 60-40, and they initially came back with a 70-30 offer. So let me share my screen again. I'm going to go back to my worksheet now, and let's just kind of like talk through it a little bit. So we started off with a 60-40 proposal. Okay, so this is what we proposed to the lender. The lender then came back and said, tell you what, if you only put 30% down, we'd like to do this deal. So this was what I call pre-approval. And at that point, we were using a loan broker for a portion of this. They even found a lender who said, we like that deal, different lender, where on a pre-approval basis, we're going to make an offer at 75-25. So I went back to my colleagues at that point and I said, well, there seems to be some interest in the building, so this looks like this could go pretty well. And as you would imagine, the next step in that process to app up, so we did our application. And in that application, we want to show a proof of funds. And in addition to that, we wanted to show what else? We wanted to show a business plan, and we wanted to show a statement of real estate owned, and we wanted to show tax information, P&L information. Let's just call it P&L. So a track record of P&L information, taxes. Like, we're fully documenting everything. Full disclosure to all the lenders. So we have two different folks right now. So we started with, hey, we're ready to put 40% of our own capital into this deal. So that's where we started. And then, they countered essentially. Oops, sorry. So they countered with 70-30, and then another one was at 75-25. And then we did our application process. And then after we did our application process, things started looking pretty good. It was, we're ready to move to the inspections, not the inspections, the appraisals. Okay, so now they're going to go from a, essentially what is first a desk appraisal, where they're just kind of looking at comps and things like that, where now they're going to go out into the field and they're going to go have a look at things. And the properties came back, generally speaking, at contract price. So what's contract price? Well, that's the negotiated final price, right? So this is considered a final price that all parties have agreed to. So this is final. So the appraisal came back at this number right here. So I'm thinking to myself at this point, wow, we're at final. This looks pretty good, right? Like, how could this not go great? Well, it's happened. It just so happens that First Republic that next Monday gets taken over by Chase Bank, and there's an announcement that it just basically happened overnight. It was something like that. So not exact dates, but I thought it was a Monday, if I'm not mistaken. So, essentially, in the order of things that are now happening, so First Republic gets taken over. Keep in mind that Silicon Valley Bank has already defaulted, right? They or filed bankruptcy, is one of the two. But it was basically Silicon Valley has failed. Okay, so now Chase is taking over First Republic. That whole week, everybody who was interested in the deal was finding reasons to destroy the deal. Now remember, and this is what's not encouraging, this is what can be challenging about this business. So we've already spent at this point out of pocket $2,500 to do an appraisal, because as everybody knows, if you're going to go to a lender, they're not going to do these appraisals for free on your loan. You are going to put some money up for that appraisal. So we've now put in some appraisal money that, for the most part, we are right at contract price. First Republic happens, Chase happens, and then all of a sudden they start saying, you know what? We still haven't approved this thing. We're probably not going to even approve this thing for better. So here's our order of what's going on now. For maybe something like 50-50. Now this is a verbal. This isn't even a written acceptance. They say, go ask the investor, go ask the buyer if this is something they want to consider. So now this is kind of like a counter, okay? And this is with our first lender, not the second, but just the first one.
This is a counter after they had already approved it at
pre-approval. Because remember, we don't really have an approval, written approval for this loan until the appraisal's in, title is checked, and things like that. They're able to obtain clean title. You don't have a deep lien history or something that could disrupt anything with lien history or with title history. Okay. So they've kind of started countering with a loan officer and saying, see if they're interested in, and this is a very odd stroke for them to do this, because at this point now, our opinion is, well, look, we've paid the money for the application, and I don't know what the application fee was, but let's just call it $1,000. Maybe we paid $1,000 fee. And, we've paid a $2,500 appraisal already to that lender's choice of appraisal companies. And they came back at contract price. And then First Republic happens, and then next we're at a 50-50 leverage at best. That turned in, no joke, by the end of the week. This is now no joke. It turned into a third. We will fund 35% of this deal by the time it was final. And this is what the loan approval came in at. They did not want to do this deal whatsoever, so they found a way to completely get out of it. So now they're at 35-65. Well, this wasn't acceptable to us, because in our contract, even though we don't try to bind interest rates, we definitely bind, I write it in anyway, I bind my leverage. And my leverage specifically stated that in order for me to obtain loan approval, it would have to be at my leverage or better. So my leverage or better is going to be, me putting only 40% down. So obviously this was going to require me to put 65% down. I can now, if I want, go back to the seller and say, sorry, I can't close on this deal. Lender is not cooperating, and I'm going to activate my loan contingency to cancel this contract, and I want all of my earnest money back. And earnest money, by the way, I think I did a standard 3%. So EMD. So let's also factor in that there's probably about a 3% EMD that is being held at this time with a loan contingency in place. Oops, sorry. All right. Should I continue on, or we have to stop?
I mean, I think that this is like just a really good, what's the word I want to call it? Like just an analysis of what you've gone through.
Yeah.
I mean, this is real, guys. This right here is 100% real. It's happening out there. So you have to just make sure that, you know, I think it's when you're underwriting and analyzing these deals, you have to be a lot more aggressive with your underwriting, and I think that also as a buyer, we have to, and I think I know you and I had this conversation, we have to give the lender sufficient documentation or support. Like we've got to give them enough information for them to feel comfortable about the deal. This isn't just a one way where the lender is going to give you everything. And maybe the lender, again, I don't know the behind the scenes information here, but maybe the lender didn't feel comfortable about the deal. Maybe the lender was missing additional stuff.
Yeah, well, let's talk a little bit more about this. So you know, one of the things that we did obviously is you know, we went back to credit reports, statement of real estate owned, amount of capital we're going to put into the deal. And by the way we wrote this contract was that we were going to self-fund the rehab. So we were going to use our own funds. So everything that we resubmitted to the lender for a reconsideration, they passed on. Now, what did we then do? Well, we went to the seller and said, look, we're going to activate our cancellation unless you want to give us some more time. If you want to give us some more time, we think we can get a loan from lender B, because we had been talking to them all along, but we had not started a loan application with them quite yet. Okay, so that being the case, what we did is we asked, and it was granted for a additional time to close. Then, simultaneously, while all this is happening, okay, so while all this is happening with the lender, insurance, the insurance broker went and farmed the deal to several carriers. As it turns out, all of our existing carriers in this marketplace, because we own property in this marketplace already, they are either not taking or will not underwrite any more risk. They are not taking any more clients. They're not taking any more buildings. They will continue to collect the premiums they're collecting on the customers that they are underwriting risk for, but no more customers. So we went to all of our usual relationship-based insurance carriers, and all of them said basically no, while this is going on with the lending. So we had to go to alternative carriers. And I will tell you, the pricing was nowhere near the same as where we had originally underwritten this deal. So we had to literally go back through our numbers and say, okay, if we had to pay additional insurance premiums, you know, can we still afford to do this deal? Like, does this deal still make sense? Because we're now paying a lot more in insurance. So now we're underwriting for new insurance costs or expense. And that's taking time out of our day now as well. And this was not an easy process. I can't tell you how many phone calls I made to my insurance broker, so many calls to my insurance broker have you found anybody? Have you found anybody? You might find one, but their premium is so out of the world that you can't even consider them. And here's the thing that some people don't realize with insurance is that you can't open an underwriting like you can't shop for insurance with one broker and then go to another broker and do the exact same thing, because there's something about the insurance industry where once somebody is trying to underwrite your building, it locks everybody else out. So you've got to make sure that you're working with an insurance broker that absolutely, they understand, or you understand that they are your person while you are trying to figure this thing out, while you're trying to get this thing underwritten. That's really, really important. The other thing is, yeah,
Paul,
go ahead.
Can we stop for a second?
Absolutely.
Let's just see. I mean, if anyone has any questions, I know this is a lot of information, but this is a real example of what it is to get involved in multifamily.
Yeah, maybe we need to have a part 2.
For sure. For sure.
Yeah.
Anyone have any questions or any comments, anything they'd like to say? All right, we're good. Perfect. So yeah.
Okay, and honestly, we're coming up at the top of the hour. Why don't we part 2 it until next week?
That's what I'm thinking. I think we should part 2 it. We have a guest speaker next week, so maybe the following week we can part 2 to this. Because I think this is great. I love these real life examples of purchasing multifamily, and just we got to share what lenders are doing and the experiences with insurances. I mean, it's crazy. So definitely part 2 it. I just want to say hello to, let's see here, who do we have? Chris, how are you? Nice to see you.
Yeah, Chris.
Great job today. Great job.
Thank you. Alfred.
Really awesome.
Alfred. Yes. Thank you guys for joining the call. We meet every Wednesday at 2 p.m. Pacific Standard Time, and it's all about talking about multifamily. We try to make it as real and raw as we can, and trying to teach others, through our own personal experiences. So
enjoying what we're doing.
Exactly. And so any questions you guys want to connect, feel free. You have our information. Paul, thank you. You did an amazing job. I love it because it's, we had already discussed it on the phone for some time, and I'm like, this is exactly what I want to share on the call. So
yeah.
Thank you so much for sharing it, and we'll see you guys next week.